Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a really interesting stock in the stock market, Eli Lilly. And we can see this stock is up 15% over the last year, while the rest of the market is down 10%. So they're completely outperforming the market over the last year. And basically, for those who don't know, Eli Lilly is essentially just a company that creates medicine using biotech, chemistry, and genetic medicine. And one of their main products is insulin. And so they're one of the main producers and sellers of insulin in the US. And so in this video, I'm just going to go into some of the recent news that's come out surrounding Eli Lilly. I'm going to look at their financial statements and then figure out if they're trading at a good buying price right now from a value investing perspective. And so right here, we can see this article points out that Sanofi announces insulin price cap after actions by Eli Lilly and Novo Nordisk. Sanofi, along with Eli Lilly and Novo Nordisk, make up about 90% of the insulin market in the US, and all three of these companies have announced price cuts or out-of-pocket caps in the recent weeks. And in particular, right here, we can see they point out that Sanofi is going to cap their out-of-pocket costs for their most popular insulin, Lantus, at $35 per month for people with private insurance. And this effect is going to take place as of January 1st, 2024. Sanofi is obviously one of the three major insulin makers, just like Eli Lilly and Novo Nordisk, and those two companies also announced changes to the price of insulin in the recent month. And together, these three drug makers make up roughly 90% of the insulin market. The Inflation Reduction Act capped out-of-pocket insulin costs for seniors on Medicare at $35 per month, but it didn't offer any relief for those younger than 65 years old who were relying on the drug. But Eli Lilly and Novo Nordisk changed that, and so this market pressure ended up pressuring Sanofi to do the same. And just right here, they point out that about 8.4 million people in the US with diabetes rely on insulin. So this is a pretty drastic change right here, and obviously from a competitor perspective, from a profitability perspective, if your two main competitors, Eli Lilly and Novo Nordisk, end up changing their price and reducing the price for insulin for their products, you obviously don't want to be the standout, because if you're charging more for your insulin, then nobody's going to buy it from you. So you have to reduce your price. And so this market pressure ended up bringing down the cost of this product. And so it's probably obviously a very good thing for people who have diabetes. And we'll see how this affects the profitability of their company in the long term. And so right here, we can see this is their income statement for 2022, comparing it to 2021 and 2020. We can see over the last year, their revenue increased from 28.3 billion to 28.5 billion. So that's an increase of about 1% year over year. But for their bottom line net income, it increased a lot more, from 5.5 billion to 6.2 billion dollars. So that's an increase of about 12% year over year for their bottom line net income. So it's pretty good growth for Eli Lilly year over year. Then right here, we can see their balance sheet. Their total assets have increased from 48.8 billion to 49.4 billion year over year. The majority of their business is financed by liabilities. They have only around $10.7 billion worth of total equity. And of that, they actually have around $10 billion worth of retained earnings. So the vast majority of their equity is in retained earnings, which is good because they can use that money to return value back to shareholders or to reinvest back into the company. And then lastly, right here for their cash flow statement, we can see they're comparing 2020 to 2021 and 2022. 2022 operating cash flow came out to be $7 billion. And they not only paid out dividends, but also repurchased common stock. They paid out around $3.5 billion worth of dividends in 2022 to their shareholders. And they also repurchased around $1.5 billion worth of common stock. And we can see the trend here for returning value back to shareholders. They've been increasing their dividend payout year over year from 2.6 billion in 2020 to 3 billion in 2021 to 3.5 billion in 2022 worth of dividends. And then in terms of repurchased common stock, that's been increasing from 500 million to 1.25 billion to 1.5 billion. So it definitely seems like, as we saw from their balance sheet, they have a pretty large retained earnings line item. And it seems like one of their main priorities with that is to return that value back to shareholders through cash. So that's definitely a good sign for investors in Eli Lilly. And so right here, this is a discounted cash flow model to figure out the intrinsic value per share for Eli Lilly. Yahoo Finance is estimating that the company is going to grow at around 22% for the next 5 years. So I was conservative and cut that in half to 11% for the next 5 years after that. They had around $5 billion in free cash flow for their most recent full year, around $14 billion of debt on their balance sheet, and 952 million shares outstanding. That puts their intrinsic value per share at $137 per share, which means that at the moment, they are not trading below intrinsic value per share because they're trading at $330 per share right now. So they're trading about almost 2 to 3 times their intrinsic value per share at the moment. Right here on the right-hand side, I compared them to 2 of their competitors in the healthcare industry, Pfizer and Merck. And we can see they have the highest gross profit margin, but they have the lowest net profit margin and lowest return on assets compared to Pfizer and Merck. They also have the highest price to earnings ratio. That could either mean that they're overpriced or that investors are anticipating that Eli Lilly is going to grow a lot faster than Pfizer and Merck, which is possible. And then we can also see from their dividend per share here that they pay out the highest dividend at $3.92 per share, higher than $1.61 for Pfizer and $2.80 for Merck. So from a competitor analysis perspective, it looks like Eli Lilly is pretty competitive. Although they're not doing as well as Pfizer in terms of net profit margin, they are paying out a higher dividend and they have a higher gross profit margin. So it's tough to say. It definitely looks like these companies are pretty competitive with one another. It would be tough to identify one that's solidly ahead of the rest of the pack because there are obviously a lot of variables to take into consideration there. And so to end off the video, I wanted to compare Eli Lilly to some of the companies we've looked at in past videos. In terms of their current trading price compared to their intrinsic value, we saw that they were trading at around 2 times or 2 to 3 times their intrinsic value per share. That puts them lower than Microsoft, so they didn't make it into the top 10 of the last 20 or so companies that we've looked at. We can see GE, Albertsons, and Google are still the only 3 companies on the list that are trading below intrinsic value per share. Especially impressive for Google because it's a big tech company, one of the biggest companies in the world, and we can see that their competitors, Apple and Microsoft, are obviously not trading at nearly as well of a buying opportunity in comparison here. We can also see that in terms of growth rate, Eli Lilly came in second place ahead of Tesla's 18% with their 22% estimated growth rate from Yahoo Finance as of today for the next 5 years. GE has the highest at 44%. In terms of profitability ratios, Eli Lilly is actually doing really well in terms of comparing them to the other companies we've looked at. They have a 76% gross profit margin and a 21% net profit margin. Adobe still comes in number 1. Nobody's been able to knock this company off the top list with their 89% gross profit margin. And Microsoft still has the number 1 spot with their 36% net profit margin. And then lastly, in terms of stock performance over the last 5 years, we can see Eli Lilly has been on an absolute tear here. They are up over 300% over the last 5 years, completely blowing out to the rest of the market's 45% return here. So compared to the other companies we've looked at, the only 2 companies that did better were Tesla and AMD. Tesla returned 700% and AMD returned 600% over the last 5 years. But Eli Lilly did return more than Apple and Microsoft. So pretty good return to investors for Eli Lilly, especially considering the fact that we saw that they pay out a very high dividend as well. So not only did they return a lot of value in terms of increased share price on their stock, but they also pay out a very high dividend to their shareholders. So that's a lot of value returned to shareholders of Eli Lilly. So I would say in comparison to the other companies we looked at, they're doing pretty good in terms of stock performance and profitability, a lot better than a lot of the companies we've looked at. In terms of growth rate as well, they're doing very well, but they're not trading at a good buying price at the moment compared to their estimated intrinsic value per share like some of the other companies were. We can also see that in terms of competitor analysis, this industry looks to be quite competitive, so it would be difficult to really differentiate one ahead of the others. If you were judging them based on profitability, it looks like it would go to Pfizer, as well as for PE ratio because they're trading closest to their earnings right now, or you could give it to Lilly because it could mean that they have the most growth potential that's already been priced into the stock. But if you were going to base them based on dividends, or rank them based on dividends, then you'd probably want to go with Eli Lilly here. So I'm not too sure what to make of this company. They've been returning a ton of value back to shareholders. So anyone who has invested in this stock over the last 5 years, or even over the last year here, as we saw, they outperformed the rest of the market. Must have been pretty satisfied with those returns. So let me know in the comment section down below what you guys think of Eli Lilly. Are you guys going to be buying any shares of this company at the current share price? Let me know in the comment section down below. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.